Mira Business FM. The sound of success.
It's the morning drive here at Mira Business FM with me, Tim Elliott. Good morning to you. Don't forget, you may be with us on the website mirabusiness.fm, but there are other ways to watch and listen and get involved across social media, YouTube and Rumble and Dailymotion, etc. All the podcasts are available wherever you get your podcasts, I think the phrase is, and you can do that just by searching Mira, M-I-R-A, Business FM. Get in touch with us, info@mira.fm, and WhatsApp as well, whatsapp.mira.fm. I think that covers it. It does. So it's time to talk personal finance now. James Thomas is here. He is an independent financial consultant, and it is a pleasure to see you, Jason Statham.
Good to see you too. Thank you.
The real Jason Statham was in the Emirates.
He was.
This week or last week? Was it this week?
Weekend,
It was
yeah.
this weekend,
Abu Dhabi
yeah.
Grand Prix.
Yeah, that's right. There you go. But you've often been confused.
I don't know about often, but you like to make the confusion.
I do. But it's funny because this used to be like a radio thing and nobody knew what you looked like. But now people are going, he is a bit like Jason Statham.
Only now you've said it.
Yeah, I know. There you go. It's certainly not an insult.
But it's not a bad person to be compared to.
Very successful. Really, the Sylvester Stallone of now.
Yeah.
In lots of ways, as an action star, I suppose. So there you are.
Anyway.
When you're doing your Iron Men at the weekend, Jason's throwing people off buildings or whatever they do in movies. Look, this week, let's get to the topic. It's ethical investing. And this is kind of interesting because yesterday morning we had an Islamic finance expert in here. So we'll come to that as well because, much of the way Islamic financing works or Islamic financial products work, it's very much based along ethical lines. It's about its contribution to, the social fabric kind of thing. So we'll come to that. But there are ways that you can be ethical in conventional finance as well, if you want to be like that in your investment life, if that fits with your ideals. Let's just start, James, with what the term ethical investing means, how you would, the definition is a good place to begin.
Yes. I think it's because it's... Just to rewind a bit, I think it came out of last week's conversation about different types of investing, and it triggered a thought process to move on to this week.
It did, yeah.
Ethical investing, it's a very broad term. I was looking for some definitions, and as you've already described, it's really just making thinking further about your investment. If we go back to where we started, building your future, a lot of people now have ideas that they would like their money to be used for better things. If it's again a very broad brush.
It makes sense. But, if you're concerned.
And if you're concerned and you have, again, from a religious point of view, certainly that's one aspect. But just more generally, people want their money to be used for more productive things. And ethical investing is a way to be able to do that. There is no... when we've spoken about in previous weeks, the critical illness, the life insurance, where there's very prescribed, sadly, life insurance is very straightforward. You need a death certificate to prove whether you're alive or not. The critical illness, the companies we work with, there's 35 conditions that are very clearly defined as to what will trigger a claim. But with ethical investing, rightly or wrongly, it's far more broad brush. There's not a prescription to say this is an ethical company and this is not. Now, companies will use the various guidelines to make themselves look more socially responsible, to have more green initiatives within them, but a lot of those are purely driven by those organisations as opposed to a particular company or standard that they have to meet.
The thing about it is, I think, there's a lot of cynicism that surrounds the idea of ethical investing because I think for a lot of investors,
it does have
make me some money. How am I going to make money?
Exactly.
Being overly nice.
People can get very. Just it's purely, as you say, about how much they can make, and how that money is made becomes secondary.
Yeah.
Whereas if you're then, it's very woo-woo, very, out there.
Very woo-woo.
You know what I mean? You're just given this terminology of perhaps you're very not as focused. But that is actually not fair on that area. You can still make money, but be very ethically minded.
Well, that's a good definition of ethical investing, isn't it? That it isn't necessarily money first. You want to make money. There's nothing wrong with making money, but it's about making money in what you perceive to be the right way.
And I think that's a very key part of ethical investing, as opposed to being laid down by maybe an ISO number or a kite mark or some other standard that's laid down by an international body. A lot more of ethical investing is driven by the individual. So your own beliefs are what's driving your investment decisions.
Yeah.
So again, when someone becomes ethical investing, again, as you probably already can gather, it covers a much broader range of descriptions, shall we say.
Yeah.
So, and then this is where when someone does come to me again and says, I want to plan my investments in a certain way, it just, to me, actually is very positive because they've given it some thought. It's not that they've just said, make me some money. It's actually, no, I want to make my money in a certain way by either excluding certain companies or actually investing into certain areas because I have a strong belief in that.
And there's another side to that, and you're right, and I hadn't thought about that ahead of the discussion today. It's an additional part of the planning, isn't it? So it's an additional kind of point of clarity, I guess. It is.
And again, helps me in a way because I can say, well, actually, if you invest into these companies, these funds, they may well have exposure to these companies. Now, are these acceptable to you or not? If they're not, that's fine. I think when we've spoken in the past, I think there's 50,000 plus funds that can be invested into. Yeah. So there's always a solution. It just means we need to find and work a bit harder to find that right solution for your situation.
Okay.
So again, going right back to the beginning, no one's the same.
Yeah. No, that really is true, and you can't overemphasize that, I think. So ethical investing is kind of, it's a broad term, isn't it?
Very broad.
It covers specific approaches, lots of different approaches. Let's break down some of the terms, first of all, because I'm looking through these. Most of them I understand. Something I hadn't thought about is negative screening before. Okay, now it's a traditional method involving excluding certain companies or sectors from an investment portfolio. And this is really about, I guess, moral objections that maybe, these are not things that you would hold close to your heart.
So a negative screening, so they're as opposed to, I guess, a positive screening, most positive screenings would be more just on the returns and the financial gains that those companies or funds have been able to achieve.
Makes
the
sense.
Negative screening would be actually looking at them from what do they do? Are they acceptable to you from, again, that ethical point of view? And we keep using this term, but what are we talking about? It's things like oil and gas. It would be so damaging to the environment. It would be...
it could be weapons.
Weapons was a very strong one. It could be tobacco. It could be, again, if we're using the Islamic point of view, alcohol, other banned substances. Maybe some people would have views about pharmaceutical companies if they don't agree with particular areas that their expertise are in. So that's where the negative screening come in. But it could also be that the company, even as far as packaging, is the company, whatever product it may be. So the product itself might be pretty benign, but has it got a bad reputation for not utilising recyclable packaging, as an example? Certainly people have looked into things. That's when the detail that can be drilled down into to decide whether, now that's, say, taking it to a very detailed, it's usually the more broad brush, the oil and gas, the chemicals, the as you say, weapons, alcohol, tobacco. They're the more typical companies that would be negatively screened.
Gambling would come into there, that kind of thing. Adult entertainment, that kind of stuff definitely comes under negative screening.
Yes.
It's interesting that, because the more you drill down, the more nuance there is. But it's the decision over, let's take packaging as the example there. It could be there is no need for you to use so much cardboard. I could not, with all the best intentions, invest in a company that, utilizes that packaging in that way. That may be a really important point to a particular person.
Yeah, it may well be. And I would suggest it's less frequent we come across that. But
sure.
But again, I want someone to tell me that when we're having our discussions, because there are still ways and means to plan for that.
Okay. So, I mean, that's the first of the terms. Negative screening is the first one.
Yep.
ESG investing. ESG is the acronym that we all hear all the time. And for ages, I just kind of nodded. I tried to nod sagely and go, ESG is very important. And I'm thinking, I don't know what it means. It is environmental, social, and governance. Of course, I get that now. But this is an approach that evaluates a company's performance based on those those factors. That's the key there, isn't it?
So that's when that packaging, for example, that would be the governance and the environmental would come in there. So they are actually thinking about it. Perhaps I'm making more of a bigger point than that one really is. But nonetheless, it just highlights how detailed one can get into this. And the environmental social governance is a very broad brush. A lot of companies will, dare I say, pay lip service to this, but it has become more...
I don't think you're alone in saying that. I think that's been said a few times with lots of companies.
Yes.
Not all, but some.
Not all, but some.
Yeah.
It's again, a buzzword, a phrase, something that it's become popular, and therefore it's mentioned, but not necessarily given the due attention it deserves.
It's true, but it's something that if you're a company and you're serious about the environmental, the social, and the governance factors, you need to be publishing what it is that you're doing. So you can make decisions on that.
You can, and again, that's another key point. You see the companies that are more serious because they do publish these things, whether they are good or bad, but they can actually publish them and then every year take an audit and to see how they've improved. If I may pick on a company, Polestar, electric car manufacturer, owned by Geely, I'm never sure how that should be pronounced, the big Chinese conglomerate.
Geely sounds better to me.
Geely.
Yeah.
But nonetheless, their cars, from literally the raw material coming out of the ground to the product being dismantled at the end of its life cycle, they have worked out the energy consumption and the damage that causes. So they are, certainly from the research that I have done, one of the most detailed assessments of their full life cycle of their product. And every year they're now publishing it. The latest models that they've produced are far more efficient, and they've then found efficiencies throughout the process as well. And the amount of energy is needed to make the car has been significantly reduced. So again, you can see when companies really do embrace the ESG, you can see they actually can make significant changes and impacts and improvements to their environmental position.
That's fair. But Polestar is Geely's link up with Volvo. Is that right? Is it Swedish technology? Or am I mixing that up?
No, you're not. I mean, initially Polestar
some kind
was
of combination.
Absolutely. Polestar started as the performance brand of Volvo. It was then split off to become its own electric-only brand. Okay. So there is a lot of components that are shared because they are very similar, but now they are pure electric standalone brand. But yes, you could rightly argue with a lot of similarities to the Volvo range.
Right. Okay.
They've got again that Swedish, very.
There's a Swedish design ethos.
Design ethos. They're the words I'm looking for. Yeah. Very clean, very simple, very functional. Yes.
I do like a Volvo. I just realised there we got onto cars, and cars is your thing, and all of a sudden you just
lit up.
Eyes just
but
lit
only because it's something that I've seen, and their report runs to many pages. So if you really want to, see a company that is embracing that's why I use that as an example, because they have taken that trouble to generate it and produce and let people know what they've been doing.
Just as an aside here, if you've been in a coffee shop at the weekend and there's a guy in there that looks like Jason Statham reading Polestar's annual performance report, it could be James Thomas. Yeah. That's a possibility. All right, so that's ESG investing.
ESG.
The next thing on this list is environmental factors, and this is not just environmental factors as a blanket headline. This is a company's impact on climate change, a company's energy efficiency, a company's waste management policies and practices. So you can really drill down if you want to.
Yes.
You want to take an ethical investing kind of standpoint. That's something that could be important to people as well.
Very much so.
Yeah.
Very, very much so. Because again, as you've identified, once the companies start producing that, you can really see what are they doing, how much are they really paying attention? How, are they making a difference to their energy consumption? Things like LED lights in offices, just as another small example. But you do that across the world in numerous offices with thousands of people sitting in those offices. It makes an enormous difference.
Yeah.
Smart heating, all these things. Lots of companies will actually record their data and show the impact or the reduction in their impact on their energy consumption.
And smart air conditioning.
Yep.
In a country like the UAE, where we are now. Okay. All of this points to intention and ethical investing, and that's why we're kind of running through, the approaches that you can take. The next one on the list, two more really to talk about, maybe three more actually. I suppose social factors is something as well. The approach that a company has to the way it treats its workers, the efforts it makes in terms of diversity, the efforts it makes in the community in which it is part or it serves.
Yes. Again, people may say that as what does that matter to the pure hard-headed view on investment? Am I making money out of this? But if the company is doing good things in its community and for its staff, it's got a happy work environment, it will probably make more money because those employees will want to work harder for that organisation.
Yeah, there's a very good chance of that, at least.
It's not guaranteed, but typically lots of studies have proven that if happy employees will be more productive.
Well, there are no certainties in any kind of investing that you do.
No.
You have to take a view, and one of those views is something like social factors. You're right. I think it's very important. We hear all the time, don't we, that a happy staff is a productive staff, and if a productive staff is producing, then companies grow. So there's actually some
goodwill in the in its local community is again another huge.
That's also important.
Huge impact. Yeah.
Okay. And it's something that perhaps in pure investing isn't really considered. So again, you're really drilling down into details here, and that's really what the ethical investor, I guess, is doing. Impact investing is a phrase that came up here. I don't know if you can explain that. I mean, I've got what I think is a definition here, but specifically allocating capital to companies, organizations or funds with the goal of generating a measurable, beneficial social or environmental impact alongside a financial return. So, an example like investing in a company that produces wind turbines or improves access to clean water. That's the
So that's again exactly the impact.
Yeah,
they are making a direct impact on that subject or that
area. There are a lot of words there I didn't understand in a row. So, but
to break it down, it's so you're probably looking at a fund or a company that's far more specialised in what it's doing. Yeah. But and having then a bigger impact in that area.
Okay. The final one here on this, and these are specific approaches to ethical investing, is stewardship or engagement.
Yep.
So this is investors using, an approach. So you hold shares in a company, you want to influence, use voting rights at AGMs, or to encourage or offer a way to make sure that there's positive change. Here's the example. Pushing a fossil fuel company, for example, to invest more in renewables would fit under that kind of stewardship engagement banner.
Yes, absolutely, because you're using your power, your combined power, because as a shareholder, effectively you own that business, to have influence over what that company does. And that stewardship of the business to make sure it's continuing to deliver the type of, or be the type of company you want it to be, and help in the areas that you feel passionate about.
So those are some of the approaches, right? So we've got that out of the way. Where and how might a person, this is where your
Yep.
expertise comes in, how might a person invest ethically? Where do we start with that?
Well, I would like I would with a normal investor with funds or ETFs, exchange traded funds, because again, to try and analyze the entire market, find companies, in particular companies that are doing these good things, you could be there for years because there's so much to sift through. And even when you then find a few, are they good, bad, or indifferent? Go to a fund that's already done that. So there's numerous, mentioned word stewardship. There's a very popular fund called the Stewardship Fund. So it's looking for opportunities that meet those criteria. So the fund manager has a very clear definition or objective of what he or they are trying to meet for the fund. And again, they will use some of the phrases there, the negative screening, but also positive screening to build that portfolio to make sure that you then don't have to do that. Because again, why do we use a fund? It's to do the screening for us and then to pool our money with lots of other investors who are also looking for similar strategies and come together to be able to then invest as a collective in those areas that we're interested in. So that would be one area. Then, but if, for example, solar, clean water, other green energy initiatives, there are, because there's been such a increase in the interest in these areas, there are also now indexes that you can track that are purely focused. So again, it's to cut out the research on your own behalf. You can go and look up an index that focuses only on that area, and then you can see that it will have companies that have already been vetted and screened within that index, and then you can buy the index via the ETF, so you get that exposure to those areas.
Okay, I mean that's interesting because it's so similar to standard. What's the word? Standard investing.
What exactly? What do we call
Pure
it?
investing.
Normal investing,
Normal
whatever you
investing.
want to call it, but just without that particular requirement for being more ethical. But yes, what do? All of the above, rather than just going to the FTSE 100, so the leading 100 companies in the UK, or the S&P 500, the 500 in the US, or whatever it might be. There are similar indices that follow these areas.
Yeah. Okay, and you make your decision based on the research you do. The
Yes.
thing with the ethical side of things is the research. Research is available wherever you go. Google is your friend, of course, it always is. But it is. It takes more effort to be better. But I mean, I suppose in lots of ways that's kind of the way you're living your life anyway. So you're willing to do more research.
I would suggest absolutely if you already have that.
If that's your mentality, if that's the way you look
the way
at
you're
the world.
looking at the world and wanting to look at the world, then you have already taken that step forward. So therefore, when you're then committing your hard-earned money, you also want that to be committed in a similar way. And therefore, you're willing to take that extra few steps, that extra bit of research to make sure that you're happy with where it's placed.
Do you think there's a feeling amongst financial consultants, financial advisors that, people that ask to be more ethical investing, do you think it's a bit like, oh, you're not going to make any money? Oh, yeah, this is a pain. I have to do more research. Is there a little bit of that, do you think?
I'm sure
Because
there is.
It's
in
a little
certain areas.
harder
It is,
to generate
but it's only a
returns in
little
some
harder.
ways. So not much.
I don't think it is.
Okay.
And I would, as I say, if a prospect comes to me and says, I want to do this, again, I'd be more than happy to assist because
Well, there's another side, isn't there?
you, again, in a far more committed investor. Because they're really clear in what they want to do, and you can explain to them. If I made, so there was a couple of funds that I mentioned, or exchange traded funds that are following. For one, I'm just
But
pulling
you
up
get to
some
do something
information.
slightly outside of the norm as
You
well.
do.
Would be an observation.
And again, if someone's coming to me and says, I want to do this, it's great. I can go off and do a bit of research, a bit of analysis, a bit of have you considered this, that, or the other? Are you aware There's a solar ETF. It's been up nearly 50% this year. So it's had an absolutely stonking return.
That's a staggering year, yeah.
Yeah. But if you then look at...
I've not heard the word stonking for a long time, by the way. Congratulations on
great.
using that.
Yeah.
That gets 10 on the broadcast bingo card.
Not many people have had that on the bingo card.
Not.
But actually, I'm looking through the top 10 holdings, and there's not one there that I recognise. They're all very much renewable energy. They're infrastructure, sustainable infrastructure capital. They're Array Technologies as another one there. So these are companies that are, as the name suggests, they're building and solar is a very specialist, because, as the name suggests, it's panels on roofs, on fields, on big chunks of desert, or indeed oceans. There's talk of that, floating solar panels. So again, all of these things are all part of the ecosystem.
Yeah.
All looking to generate.
We were talking this morning with somebody who said Sundar Pichai from Google is looking at putting data centers in space. You'd have data center power, basically data center stations, space stations.
Yes.
Spater. I don't know. What would you call them? Fantastic idea. There are all sorts of outlandish ideas.
There are all sorts, and a lot of them will come to nothing. But where actually you've triggered another point that I wanted to make is the irony of a lot of the growth this year and the last couple of years in alternative energy especially has been driven by AI and the big tech companies, because of their enormous thirst for power to run the cloud. Because again, we all think of a cloud somewhere sitting up in space, but of course, well, maybe it will sit in space. Good. But at the moment, they're largely in big rooms that they want to put in cold places, because they need to be cooled because of the heat generated by the servers.
Yeah.
So, all these, and they obviously are conscious of because on their business plans or their annual reports, they will have a section for ESG. They want to be seen to be generating or utilizing power that's come from clean sources. So it's directly feeding into the solar industry, another alternative energy, because that is a huge area of consumption.
It always makes me laugh is the wrong word, but it's kind of vaguely amusing that things come down to such simple questions in the end. These huge data centers. I mean, you said big rooms. These are
vast.
the vast size of football fields.
Yes.
Many football fields.
Yep.
But the energy produced is such that the heat is an issue. You need to cool them, and it just seems like such a simple thing, but it is such a huge issue because our thirst for information and the internet and the next thing in technology is there. It all comes down to simple engineering stuff at the end very often, doesn't it? That aside, let's look at some, I guess, I was going to say investment strategies, really, but the things that you avoid, I'll let you lead with investment strategies if ethical investing is the way you want to go.
That's an interesting question. Why I say that, as I've just highlighted, in the last year, the solar isn't picking on that has performed amazingly well. But the previous years, it's had years where it's fallen by a similar amount. Certainly when the first Trump administration, it went through the doldrums because there was a view that we were going back to more traditional sources of energy, and therefore these new alternative power production wasn't so.
That's when coal was purported to be making a huge comeback.
Precisely
at that point.
At that point. Yeah. So there has been a period where it's probably suffered from its lack of investment or perceived lack of use. Suddenly that's
through lack of interest.
Through lack of interest.
Yeah.
So they can be far more volatile, would be one of my observations. So again, that needs to be discussed and highlighted.
Well, that's something you need to factor in.
And you need to factor in.
Whatever you do, whatever investment you make.
So again, with a lot of clients who show or declare an interest, it may well be that, I think we discussed the strategy, what I call core and satellite. So a core holding of the more traditional investments, and then the satellite, rather than maybe being tech or other more volatile, they're replaced by the ethical investing.
Okay.
To give you an area, because again, while we may think we are wanting to be completely ethical with our investing, when we see something fall 20, 30%, you then have the more normal reactions. Oh, I didn't want to lose money.
Yeah.
So therefore, if I have that core that perhaps not quite as ethical, but more solid in its construction, and we then have those funds on, as I call a satellite, sitting around the outside of that, a smaller investment amount. So therefore, you still get that good feeling, dare I say, that you're committing some of your investment, your hard-earned money, to your good causes. And again, that makes it sound naff. It's not meant to, but the areas that you feel passionate about, but not to the degree that if it were to fall significantly in value, you wipe out your retirement plan.
You've talked in some detail about global clean energy. That's the fund that you've particularly been talking about. So 2025 up 47%. That's a stellar year.
Yes.
And the focus there is what? Solar, wind, hydro, electric power as well.
Exactly.
Okay.
Yes.
So that's there's also the global solar fund up 46%.
Very similar performances.
So energy
similar
around
regions.
the world. And as you mentioned, they're in the doldrums in past years through administrative, I guess, in the US decisions.
But obviously they're having a knock-on around the globe.
Well,
There's a lot of the venture capital and the startup money that funds and gets these initiatives off the ground originates from the US.
Okay.
It's starting to change, but that's been typically where it comes from.
Right. Well, there's another one here that you mentioned in the notes, and it's a fully Sharia compliant fund. That's the Amana Global Equity Fund.
Yes.
Yeah.
Very interesting fund.
Strong returns.
Amazing returns.
20%
a year for the last 4 years.
Okay. So that's a heavily US weighted fund. It's HSBC fund, is that right?
It is an HSBC fund,
Right,
yes.
okay.
They're Amana range. But why I just thought, again, so great name in the sense that most people would have heard of HSBC. So a very well run fund. It's, where are we? 7 billion under management. So again, not a small fund. You're pooling with a lot of other investors. But the returns, it's been 22% per year since the fund was formed. So you're able to then have your religious ideals met, but still get a very good rate of return. As I mentioned, when you look at the sector allocation, the geographical allocation, highly weighted to the US, 81%.
Okay.
So, this is where your previous question really becomes more pertinent. Yes, you've got your religious or personal beliefs as one area, but then this is where, as your advisor, I would start saying, okay, that's great, but are you aware to meet those requirements, you're actually exposing a lot of your money to one area? And how does that, is that okay? Because
it runs contrary to kind of perceived wisdom, doesn't it?
It does, that's exactly it. Yeah. So you're, rather than diversifying, you're actually concentrating. Is that a concern?
Yeah, okay.
Or does your beliefs outweigh that?
Yeah.
But that's fine. But
that's a strength of conviction.
It's a strength of conviction. But the conversation needs to be had to make sure that you're happy with that. And then maybe we look for, again, I'm just picking on this one particular fund, we go off and do some research and find a fund that is more weighted to other countries. Because again, I mentioned this geographical, from a sector point of view, it's over 50% in technology. So again, you can see where most of that return has come from.
I was going to say, that's where the growth's from.
Yes.
Obviously, but yeah, fair
so
enough.
Again, no problem with that, as long as you're aware that it's almost a pseudo-technology fund focused in the US. It's just that the funds have met the criteria to be viewed as Islamically acceptable.
Okay. Okay. So, well, it's interesting that we're there actually. So again, just before we jump on, but this is a question of research and strength of conviction
Yes.
of decisions, and the level of comfort that you feel
Yes.
based on the research that you've done.
Yes.
And if something is announced as being Sharia compliant, then hopefully that meets your own particular kind of core principles. But I think the world of Islamic finance is interesting here, because if you're looking for a more, I mean, in theory, a more transparent, certainly a more ethical viewpoint, then lots of Islamic financial products will meet the desires of people who aren't necessarily Muslim, but are looking for
Yes. I mean, I would have no
a more
qualms
transparent, ethical viewpoint.
if I wanted. I would happily invest in that fund. I mean, the returns alone are justifiable.
It makes a great headline,
Yeah.
that's for sure.
But as long as you're aware that it's largely US focused and it's largely technology focused,
Yeah.
if that is also acceptable to you, and again, going back to my principle, core and satellite, that would be very much a satellite fund, because it's of where the investments are structured,
Right. Okay.
because it is higher risk. It has to be viewed as higher risk because it is so concentrated in one country and in one sector.
Yeah. Okay. But that's the risk reward
Yes.
paradigm, isn't it, James? That we talked
Always.
about ad infinitum, I think. But it's interesting that that's a Sharia compliant
Yes.
fund, because Islamic finance offers this kind of approach. If you're looking for values based rather than value based investing, and it's an important distinction to make, really. But it's a benefit to everybody.
It is.
Doesn't matter where you're from, what you look like, who you are, what you
But
believe.
again, it takes away that, when we were talking right at the beginning about it being slightly alternative, slightly out there. Well, no, this is bang right in front and centre. This is investing into some really serious companies that have met the Sharia compliant criteria, and produce some fantastic returns. And yet, so that they would be, and it would be acceptable to most investors from a return point of view. That other hard-nosed, purely investment-driven focus, but equally they would meet the Sharia compliant view as well.
Well, it's a natural sort of path of asset allocation, isn't
Yes.
it? It was something you would immediately consider. Do you think, in some ways, there's an attitude of you used the phrase "woo woo" earlier on, the kind
Yes.
of hippy dippy approach?
Yes, that's what I mean. It's
is
not hippy dippy at all. It's very
It's very much mainstream.
mainstream.
That particular fund
Yes.
that you're talking about, and I think that it makes an important point, doesn't it? That it's not necessarily that you're just a hippie that wants to do the right thing,
Yes.
but there is a genuine alternative there. I think is the point.
That's exactly the point.
Okay. Do you think there's an attitude sometimes in the investment community, in the professional kind of financial community, that ethical investing is a little bit too out there for me? You got to think about returns. It's all about bang for your buck.
It certainly was there. Is it still
Changed,
there?
do you think?
It's certainly changing, because again, examples like this that prove very much that you can have both approaches in the same fund and achieve a very attractive return. It certainly was in the past. Oh, what are you worrying about that for? You want this. This is where you don't want that. That's only going to lose you money. Not the case.
Right. Okay. So there definitely has been a change.
Yes.
There's a change of viewpoint.
Yes.
I guess it's a generational thing, but it's also necessary, isn't it?
Very much so. Yeah.
Yeah. Okay. What have we missed today? We've got 5-10 minutes left. We can still talk. What have I not asked you? I should have asked you.
I've just searching through my notes there was a couple of points that I wanted to raise. Really just further about doing your research. I've mentioned about indexes or indices that track the green companies. And there was just a couple of points I wanted to raise. I mean, this one particular is the MSCI Europe Select Green 50 Index.
Gotcha.
So
Yep.
the name's just very top 50 companies in Europe with a green bias is the, if I read the description, includes large and mid-cap companies across 10 developed markets in Europe, to represent the performance of those stocks and build an index that people can then follow. Environmentally sustainable economy through use of efficient and limited global natural resources. So, sounds great, that's what it is. If I then look at the top 10 holdings, or constituents rather, of the index, number one is Total Energies.
Okay. All right then. Who I know to be doing a great deal to address ESG concerns.
They are. But I just wanted to, again, highlight that point. Total Energy, I guess second or third after British Petroleum and Shell. There's an oil company.
In terms of market cap, for
yes.
sure. Yeah.
But because of they're very much taken a view a few years ago to pivot away from that more towards the green energies, and hence the name Total Energies as opposed to when they were just simply Total.
Do you know what? It's a really good point actually that you make, and I understand why you're saying that, because you do the research. If you were to look at the list and you see an energy concern at the top, first glance there are bells.
Yes.
There are alarm bells going. But you need to do the research to understand what Total are doing to mitigating any effects.
And then looking down the list, SAP, so the technology company. So again, you're not initially thinking, well, why is a IT company there? But because of what they are doing with their technology to help the green industry and how that tech is being implemented in the first place.
Yeah.
Again, Siemens, so building wind turbines and other industrial or utilising their industry to help with the green improvements.
Do you know what's interesting about this? Lots of financial advice, investment advice, it's the kind of thing that, people often sit together and discuss. And we've all got the friend who is the expert and is just, you don't want to do that. I've looked into that. That's just a load of old nonsense. And generally those people are the people that haven't done their research properly. We know that. But it's easy to influence people who are trying to do the right thing. They talk to somebody that they perceive to have a better knowledge of maybe the investment world and make a decision based on, it's erroneous information in some cases.
Very much so.
So,
but again, I just wanted to highlight it's the research and then just looking, because then you start drilling into these companies and you see, they've had to go through a strict vetting process to be part of these 50 companies. And when that dismissal in the past, it's a load of old nonsense. No, actually, there's a lot of, it may not be perfect, but these companies are striving to move things in the right direction.
Yeah, okay. And you can do the research and see the published documentation, see the results, and then you make your decision based on that. The point of this conversation is not to recommend anybody or any particular thing, by the way. And that's not what we're trying to do.
Absolutely not. And that's why I'm talking about, I like these utilising, or discussing rather, these indices, because these are independent bodies who have actually put these together because they view them as companies that are delivering green initiatives.
Sure, and they offer a cross-section in terms of research and ideas.
And again, if your views are still not being, or your beliefs are not being met by these particular companies or indices, then there are still, again, as I mentioned, 50,000 funds. So there will be something that will be there that does meet your criteria.
It's also not something that you should be afraid to ask for. This is if this is how you think and this is what you want to see. This is how you want your investing life to be. The point is that there are funds across the board that underperform, overperform, outperform.
Yes, and then we'll do it different times,
ways.
which is why I'd actually have less concern about investing into them. As long as the person is on board and understands, because if they're part of a portfolio, again, why do we build a portfolio? Because when one's up, one will be down, etc. So you get that balance across them. So as long as they aren't correlated, and again, you'd have to say that this sector does correlate very closely, even if you're in solar or wind or hydropower, there is a lot of cross correlation, but it's still worthwhile exploring to make sure that opportunities are taken advantage of.
I just thought of a great dad joke. There's far too many financial advisors a bit too interested in wind. But there you are, that's just a different thing, I suppose. It's not funny at all. But, do you know, this conversation, we've kind of looked at this from through a lens of if this is how you want to live your investment life, okay? But there's also a point to be made that it might be that there's just one thing that really appeals to you. You love the idea of, I don't know, take solar energy, take wind energy, since that's where I managed to go a moment ago. But it might just be something that you're really interested in, something that you really want to see grow, something that you really believe in. It's not necessarily that you want to live, you want to be the most perfect ethical human being that's ever existed. The point is, there are things you can do to be better in your investing life if you decide to, in particular sectors, that could also make you money.
Yes, it's not purely.
You don't have to be purely ethical.
It's not purely ethical. It's not a pure folly. These things will allow you.
That's the word. Yeah.
To invest your money as a proper investor, and proper in inverted commas, in the areas that you're interested in, with the expectation it's not just because you think it's the right thing to do. It would also have the potential to make you a lot of money. And and again, as always, the longer you invest for, the more chance you have of making money, because these things, as I've seen over the performance figures, the longer you're there, the better the returns.
And I guess in our lifetimes, solar, wind, hydroelectric energy, energy sources are, I don't want to say safe bet investments because that's the wrong thing to say, but they are.
You would think that they are areas of expansion, of growth. Yes.
Yeah, so that seems like a reasonable play. It's just an interesting conversation because, again, it's really got nothing to do with...
I would say it's not the first conversation I would typically have with a prospect or a client. No. But as that relationship develops, and I've asked them, so anything else you'd like to let me know about? And they do, absolutely. Yeah. And it's become more frequent that I'm asked those questions. 20 years ago, 25 years ago, when I entered the industry, it wasn't. It was technology then, funny enough. The dot-com bubble was just before it exploded. But these things have become far more of interest to more people. Hence why there's now so much information out there to take advantage of, because it has become an investment class in its own right, with the right structures, and the companies are run as the same as any other company, with the right due diligence and the right structures and the boards of investors, and so they are following their proper mandates.
I just thought of something else there as well. We've got a few seconds left, but I guess when it comes to doing research, and that's such an important part of this, I think that's one of the takeaways from this discussion today. But, utilizing AI, harnessing AI in the proper way. One of the things that I think is a real bonus about AI is it's dispassionate. It's, generally speaking, I like to think at least, it's unbiased. You put a question into Google or whatever your particular AI engine might be, it's going to give you a broad spectrum of views. It gives you a reasonably honest answer. So doing research now, it's a starting point, I understand that, but if you have no kind of vested interest. I hope you don't have any vested interest.
I would hope so
being
too.
Naive.
Maybe we are, but I like to think that you asked that question.
It's pulling on lots of sources.
Yes,
is the point. And if you use the internet to research in a more traditional way, you're looking at particular articles where there may be vested interest or advertisers or particular ways that a writer thinks. Hopefully, AI is a bit more dispassionate, or at least displays a number of different ways of looking at it. So that's kind of a useful benefit there. It's just something that struck me. Look, we're out of time, unfortunately, but ethical investing today with James Thomas, independent financial consultant. And as always, good to talk to you. Thank you.
Likewise, thank you.
Appreciate you coming in. This is Mira Business FM.